Microsoft is currently the third largest company in the world by market cap and one of the big 5 tech giants alongside Google, Apple, Amazon, and Facebook. In its 45 years of business, Microsoft has fueled its growth through constant innovation and major acquisitions. A single dollar invested in Microsoft at its 1986 IPO would have turned into $3,864 by 2021. That's with dividends reinvested, of course. This amounts to a total return of 386,436%, or 26.68% annually. You can just imagine the crazy wealth this created. In fact, of early Microsoft employees with stock, 4 have become billionaires and at least 12,000 have become millionaires. But can an investment in Microsoft today still build wealth? In this video, I'm going to do a comprehensive overview of Microsoft's current business and explain whether it deserves a place in your long-term dividend stock portfolio. My name is Zach, and you should leave a like and subscribe to the channel if you enjoy the video. You should never invest in a business you don't understand. So today, I'm going to provide a full picture look at Microsoft. First, let's recap the company's history. Microsoft was founded in 1975 by childhood friends Bill Gates and Paul Allen. Both were obsessed with computer programming and had business aspirations. Inspired by the January 1975 cover of Popular Electronics magazine, Gates and Allen developed a basic interpreter for a new personal computing device called the Altair 8800. After striking a distribution deal for the software, Gates dropped out of Harvard and Allen quit his job in order to create Microsoft. The name was an obvious choice for them because they were creating software for microprocessors, so Microsoft. By 1980, Microsoft entered the operating system business. They earned a contract from IBM to be its PC's operating system. They created MS-DOS, which propelled Microsoft to become the leading PC operating systems vendor. Paul Allen would resign from Microsoft in 1983 after developing Hodgkin's disease. In late 1985, Microsoft released Windows, which was their first graphical user interface for the MS-DOS operating system. This followed the 1984 release of the Apple Macintosh, which first brought this concept to market. This window-based point-click GUI system made personal computers far more accessible to the average person. In 1986, Microsoft became a public company, traded under the ticker symbol MSFT. By 1990, they introduced the Microsoft Office suite, which bundled separate applications such as Word and Excel. They would continue to release new versions of Office along with their Windows OS. In 1995, the company released Windows 95, which featured multitasking, a start button, 32-bit compatibility, and Internet Explorer. Microsoft absolutely dominated the computer OS market share at this time, especially after Apple declined from the Steve Jobs removal. This led to a highly publicized antitrust lawsuit arguing the company was a monopoly. On January 13, 2000, Bill Gates handed over the CEO position to longtime Microsoft employee Steve Ballmer.
Ladies and gentlemen, Steve Ballmer!
Gates then transitioned to a new role called Chief Software Architect. In 2001, Microsoft released the widely popular Windows XP and the Xbox, which was their first move into the video game console industry. In 2008, they launched Microsoft Azure. Originally designed for developers to deploy apps in the cloud, Azure soon became a core Microsoft service that grew to include hundreds of applications. In 2009, they launched the Bing search engine, which failed to seriously compete with Google, but gathered valuable data for the company. In 2011, Office expanded to the cloud with the introduction of Office 365. Also, Microsoft acquired Skype for $8.5 billion that same year. In 2012, they launched the Surface line of tablet PCs. On February 4th, 2014, Steve Ballmer stepped down as CEO of Microsoft and was succeeded by Satya Nadella. Nadella previously led Microsoft's cloud and enterprise division. That year, they purchased the video game Minecraft for $2.5 billion. In 2015, they launched Windows 10. In 2016, they bought LinkedIn for $26.2 billion. In 2017, they launched Microsoft Teams. In 2018, they acquired GitHub for $7.5 billion. On March 13th, 2020, Gates announced that he was leaving Microsoft's board of directors in order to focus more on his philanthropic efforts. On September 21st, 2020, Microsoft announced its intent to acquire ZeniMax Media for $7.5 billion. The deal is expected to occur in the second half of 2021's fiscal year. Now that was a lot to go over, but it really only scratches the surface of Microsoft's history. The company is quite literally a tech giant and has transformed significantly over the years. So what does Microsoft's business look like today? It can be broken up into three main segments: productivity and business processes, intelligent cloud, and personal computing. The productivity and business processes segment includes Microsoft Office, LinkedIn, and Dynamics. Office is the suite of productivity software Microsoft has provided for decades at this point. If you haven't heard of them, you likely have been living under a rock. It includes Word, Excel, PowerPoint, OneNote, Outlook, Access, Exchange, Teams, SharePoint, OneDrive, Publisher, etc. The Office business is split between consumer and commercial focus. Over the past few years, Microsoft has been transitioning its customers from the licensed on-premise softwares of years past to the cloud-based Office 365. This uses the subscription-based business model, which creates a reliable recurring revenue for the company. Additionally, it removes the problem of people not wanting to spend money to upgrade to the newer versions of the software. This was a growing problem as it became more difficult over time to make compelling improvements to the incremental versions. Additionally, this new model will allow the team to focus on supporting one version of the software since most users will be using the same. This cloud-based subscription is a better business model and better for the end consumer. It allows customers to easily get the most up-to-date software and access their files from any device, while creating a growing base of consistent revenue for the company. Microsoft Office still rakes in huge profits, and you can see why when you take a look at the plans they offer. For home, you can spend $69.99 a year as an individual or $99.99 as a family. For business, they offer plans on a per-user basis. For example, their standard plan is $12.50 per user per month, and their premium version is $20 per user per month. You can just imagine how quickly this revenue scales up at corporations with thousands and thousands of employees. From 2019 to 2020, Office commercial products and cloud services revenue increased $3.1 billion or 12%, driven mostly by Office 365 commercial growth of 24%. Office consumer products and cloud services revenue increased $458 million or 11%, with continued growth in Office 365 consumer subscribers to 42.7 million. However, the Office suite has significant competition. There are countless alternatives to their various products, and many are free of charge. Most notably, Google has made a significant move in this area. They have competitors to most of the Office suite and offer them online for free. Also, these services are extremely well integrated into Google Chrome, which is a far more popular web browser than Microsoft's current Edge browser. Microsoft does now offer free versions of the Office software online, but Google is a real competitor in this area. I find myself using their services far more often, even though I have Microsoft Office. It's so well integrated into Google Chrome that it's become my default. Even in the writing of this video, I used Google Docs over Word. Despite this competition, Microsoft's Office suite is growing and will continue to be a cash cow for the company. The products constantly improve and are heavily integrated between each other. This creates a software ecosystem that helps retain customers. Additionally, the scale and experience of this division in Microsoft allow them to quickly move to new areas and innovate their suite. This is most recently seen by Microsoft Teams, which aims to compete with services like Slack. Microsoft Office has evolved significantly over the past decade, and I expect it will continue to. LinkedIn is another big part of this segment for Microsoft. This is a social network that connects business professionals and companies. LinkedIn generates revenue through premium subscriptions, talent solutions, market solutions, and sales solutions. These are various services which are detailed more in Microsoft's 2020 annual report. This will be linked in the description of the video. LinkedIn has over 700 million members, and its revenue increased $1.3 billion or 20% from 2019 to 2020. Growth depends on the ability to increase the number of LinkedIn members and continue offering new services that provide value. LinkedIn was acquired for $26.2 billion, and it seems like that will be a successful investment for the company long term. It faces some competition, but is the largest social network in the professional field by far. The third part of this segment is Dynamics. This provides cloud-based and on-premise business solutions for financial management, enterprise resource planning, customer relationship management, supply chain management, and other application development platforms for businesses of all sizes. Dynamics revenue is driven by the number of users licensed, expansion of revenue per user, and the continued shift to the cloud-based SaaS model of Dynamics 365. They compete with vendors such as Oracle and Salesforce. Dynamics products and cloud services revenue increased 14% from 2019 to 2020, driven by Dynamics 365 growth of 42%. The intelligent cloud segment of Microsoft consists of server products, cloud services, and enterprise services. Their cloud services are the fastest growing part of the company through Microsoft Azure. This is a comprehensive set of cloud services that offer developers and enterprises the freedom to build, deploy, and manage applications on any platform or device. Customers use Azure through a global network of data centers for computing, networking, storage, mobile and web application services, AI, Internet of Things, cognitive services, and machine learning. Azure Cloud Computing enables customers to devote more resources to development and use applications rather than managing on-premise hardware and software. Azure revenue grew 56% from 2019 to 2020 due to the growth in consumption-based services. This section of the company is where they will likely see their largest growth over the next decade. Azure faces formidable competition from companies like Amazon, Google, IBM, Oracle, VMware, and open source offerings. They are currently second behind Amazon Web Services in market share, and those two are the clear leaders by far. Microsoft server products are designed to make IT professionals more productive and efficient. This includes SQL servers, Windows servers, Visual Studio, System Center, and GitHub. GitHub provides a collaboration platform and code hosting service for developers. GitHub controls 88.46% of the market share in source code management. Server products revenue is mainly affected by purchases through volume licensing programs, licenses sold to OEMs, and retail packaged products. Overall, server products and cloud services revenue increased $8.8 billion, or 27% from 2019 to 2020, driven mostly by Azure. The final part of Microsoft's intelligent cloud is their enterprise services. This includes Premier Support Services and Microsoft Consulting Services. These assist customers in developing, deploying, and managing Microsoft server and desktop solutions. It also provides training and certification to developers and IT professionals on various Microsoft products. Enterprise services revenue increased $285 million, or 5% from 2019 to 2020, driven by growth in the Premier Support Services. The personal computing segment of Microsoft includes Windows, Surface devices and accessories, gaming, and search. Windows is the operating system you've likely used many times over your life. Among desktop computers, it controls 76.26% of market share with a gigantic lead over competition. Among all devices, it controls 31.6% of market share behind only Android. Windows is mainly broken between OEM revenue and commercial revenue. Windows OEM revenue is impacted significantly by the number of Windows OS licenses purchased by OEMs, which they pre-install on the devices they sell. For example, this is like when you go and buy an HP or Dell laptop and it has Windows pre-installed. Windows commercial revenue includes volume licensing of the Windows OS and Windows cloud services such as Microsoft Defender Advanced Threat Protection. Windows revenue increased $1.9 billion, or 9% from 2019 to 2020. The devices section includes Microsoft's Surface line and PC accessories. Surface is designed to be a flagship line for Windows, where Microsoft can highlight what a Windows PC can be. It started with their tablet PC form factor in the Surface Pro. After a slow start, this has actually become a very popular product line. I've used one in the past and I genuinely liked it. Over time, the Surface line has expanded to include various laptops, tablet PCs, and desktops. The quality and care Microsoft has put into building this brand makes me think they can genuinely compete with not only other Windows computer manufacturers, but even Apple. Microsoft recently announced that they will be now manufacturing their own chips for their Surface PCs and servers. This move is wildly successful for Apple's recent product refresh and should be a wise move for Microsoft to follow. I think Surface is here to stay and will be a growing part of Microsoft in the future. Surface revenue increased $457 million, or 8% from 2019 to 2020. Microsoft's gaming segment consists of the Xbox console and its related services. The next generation Xboxes recently launched with the Xbox Series S and Xbox Series X. Demand seems high based on the fact they've been sold out for months, but the supply has been low. I actually just got an Xbox Series S after a few months of it being out of stock. I've got to finish this video though before I can start playing. Anyway, it's safe to assume that they're being beat out by PlayStation 5 in sales based on recent trends. However, console sales are not where the money is made. In fact, most next-gen consoles are sold at a loss. The money is made in the services and games sold to users. The future of Xbox is as a platform, not a console. Microsoft realizes this and has been transitioning Xbox towards this future. Xbox revenue mainly consists of subscriptions and sales of first-party and third-party games. Historically, Xbox Live has been the cash cow. This allows you to play games online with friends for a monthly subscription of $9.99. Xbox Live currently has 90 million monthly users. However, they've been pushing a transition to a newer service called Xbox Game Pass. This subscription offers access to a library of over 100 games that you can download and play. This is a far more cost-effective way to try out and play various games. Xbox is treating this service with the highest priority. They are offering tons of high-quality games and trying to get new games on the service at the same day of launch. This is available for $9.99 a month, but for $14.99 a month you can get Game Pass and Xbox Live combined. This service is a fantastic value considering most games cost between $30 and $60. Game Pass now has over 18 million subscribers. But wait, there's more. Xbox Game Pass now includes a beta of cloud gaming. This means you can stream these games directly to your Xbox console, Windows 10 PC, phone, or tablet. This removes the extra step of downloading games, improving the ease of use. Also, this allows you to play a game on practically any device. Over time, this will turn Xbox Game Pass into the Netflix of gaming. You'll be able to browse over a library and instantly pick and play any game. The future of gaming is cloud streaming because it removes reliance on the powerful hardware needed to game. Microsoft is using their Azure Cloud technology to allow this on-demand streaming of games to PCs, consoles, and mobile devices. This integration under Microsoft's umbrella gives them a massive competitive advantage over other gaming companies. Xbox is well aware that these streaming services will be the future of gaming. The business model will be more similar to Netflix and Disney Plus than anything else. They will need to focus on exclusive games and having constant compelling releases to reduce churn. So you know what that means. Content is king. In the past, this has been a weaker area of Xbox. Compared to PlayStation and Nintendo, they had far less exclusive first-party games. Microsoft has been focusing to make sure that they improve in this area. Over the past few years, Xbox has been building their first-party games through Xbox Game Studios. In 2014, they acquired Mojang Studios, who created Minecraft. In 2018, they made a slew of acquisitions. They bought Undead Labs, who creates the game State of Decay. That's actually one of my favorite games, by the way, and I think the development team is wildly talented. They bought Playground Games, who creates the popular Forza Racing series. They also acquired Obsidian Games, who makes high-quality RPGs. They recently released The Outer Worlds, which was a critical success. Previously, they developed licensed games like Fallout New Vegas and South Park The Stick of Truth, both of which were top-notch quality. Obsidian is a massive acquisition for Xbox Game Studios. Other 2018 acquisitions include studios like Ninja Theory, In Exile Entertainment, and Compulsion Games. In 2019, they bought Double Fine Productions, which has made popular games like Psychonauts. However, the biggest acquisition of them all came in 2020 when they acquired ZeniMax Media for $7.5 billion. This blockbuster deal got them top-notch video game studios and major franchises. This includes Bethesda Game Studios, who makes Fallout and the Elder Scrolls series, id Software, who makes Doom, Wolfenstein 3D, and Quake, Arcane Studios, who made Dishonored and Prey, Machine Games, who has made the newer Wolfenstein games, and much more. This is huge, and an obvious signal that Xbox knows content ownership will be incredibly important in the area of game streaming services. Xbox Game Studios already includes 343 Studios and The Coalition, who have made the popular Xbox exclusives Halo and Gears of War respectively. Despite all this, you can still make the argument that PlayStation and Nintendo have stronger first-party games, but they are undoubtedly falling behind in the area of technology and business model. Xbox has the first-mover advantage in the game streaming service and has been addressing their content weaknesses. I could see them gaining an early lead in the streaming wars and cementing themselves as a major player in the future of gaming. If you can't tell, I think Microsoft is doing a lot right with Xbox. If I could invest solely in Xbox, I would. But honestly, they're far better off being a part of Microsoft. This has granted them massive capital resources and Azure Cloud integration. Microsoft gaming revenue increased $189 million, or 2% from 2019 to 2020. Xbox content and services increased $943 million, or 11%. The prior year, it grew 19%. Xbox hardware revenue declined 31%, though, primarily due to a decrease in volume and prices of the console sold. Production constraints due to the 2020 mess and being prior to a new console launch understandably reduced these numbers significantly. Alright, so that's the end of gaming. The final part of Microsoft's personal computing segment is their search business. This includes Bing and Microsoft Advertising. Bing has obviously lost the search war to Google, and it's not even close. Google has 87.74% of the search engine market share in the US, leaving Bing in second with 6.25%. The stats are even worse for Bing globally. Although it's not really too competitive, 6% can still provide value to Microsoft. They earn revenue from advertising and collect valuable data. Search advertising revenue increased to $112 million, or 1% from 2019 to 2020. So that should give you a good understanding of Microsoft's current business. Now let's take a look at some of its fundamentals. Since we just analyzed the company by its three segments, let's take a look at the financial results of those segments. For revenue, productivity and business processes increased from $35.86 billion in 2018 to $46.49 billion in 2020. This is a 13.7% compound annual growth rate in this segment. Intelligent Cloud increased from $32.2 billion in 2018 to $48.36 billion in 2020. This is a 22.5% compound annual growth rate. Personal computing increased from $42.27 billion in 2018 to $48.25 billion in 2020. This is a 6.8% compound annual growth rate. Operating income saw even greater growth over this time frame. Productivity and business processes increased from $12.92 billion in 2018 to $18.72 billion in 2020. This is a 20.36% compound annual growth rate. Intelligent Cloud increased from $11.52 billion in 2018 to $18.32 billion in 2020. This is a 26% compound annual growth rate. Personal computing has increased from $10.61 billion in 2018 to $15.91 billion in 2020. This is a 22.45% compound annual growth rate. If you can't tell already, Microsoft is an absolute powerhouse of a company. As a whole, the revenue, profit, operating income, net income, and free cash flow have all been steadily growing at sizable rates for a long time. Over the last 10 years, their revenue grew from $62.48 billion to $143 billion, giving it an 8.6% compound annual growth rate. Their gross profit grew from $50 billion to $96.93 billion, giving it a 6.8% compound annual growth rate. Their operating income has grown from $24 billion to $52.95 billion, giving it an 8.2% compound annual growth rate. Their net income has grown from $18.76 billion to $44.28 billion, giving it an 8.9% compound annual growth rate. Since 2016, their free cash flow per share has nearly doubled, going from $3.15 to $5.94 in 2020. Not only has Microsoft been consistently growing for a long time, but its rate of growth has increased significantly over the past 3 to 5 years. This makes sense when you consider all the areas of growth and acquisitions I explained earlier. So as a business, Microsoft looks great both qualitatively and quantitatively. But now we need to take a look at the stock as a dividend investor, since that's the theme of this channel. Microsoft's stock price has increased over 380% in the last 5 years. The market cap now sits at $1.84 trillion. It has a PE of 33, which is right in line with today's overvalued market. This all becomes quite clear when you look at Microsoft's dividend. It has a $2.24 annual dividend payout, giving it a 0.92% dividend yield at its current price. The dividend has a 10.13% 5-year compound annual growth rate and has been consistently increasing for over 17 years. Microsoft is most certainly going to be a dividend aristocrat and likely dividend king in the future. The payout ratio is currently 30.4%, 8% and has been decreasing due to the company's growth outpacing the recent dividend increases. So Microsoft has a lot of room to increase their dividend over time, especially when you account for future growth of the company. However, the current dividend yield is terribly low compared to Microsoft's yield historically. This is of course due to the high price it's trading at. So Microsoft is definitely richly valued at the moment, but that doesn't change the fact that it's a quality company that is focused for the long term. I think Microsoft will continue to innovate and is a fantastic holding in a long-term dividend stock portfolio. So what's my plan? I currently own just 2 shares of Microsoft with a 1.054% dividend yield and a cost per share of $212.45. This amounts to only $424.90 invested in the company, which is small beans. I want to build up Microsoft as a core holding of mine over the long term, so I'm going to implement a dollar cost averaging strategy. This means I'm going to buy at least 1 share every month. I tend to dollar cost average when I believe heavily in the underlying business and want to build my position. For example, I'm currently following this with both Apple and Disney. Sometimes it's better just to own a quality company rather than get scared off by valuations. If the stock goes down, then great, I'll load up and buy more at a better price. In fact, that's what I'm hoping for. So that's my plan for buying Microsoft, but don't take my advice blindly and be sure to do your own research before making any investment decisions. Thank you for watching Dividend Data. I'd greatly appreciate if you could leave a like and subscribe to the channel. If you follow me on Twitter, link in the description, you can get real-time updates on my buys and dividends coming in. Also, you can follow me on Instagram at Dividend Data, where I've been posting frequently. You can support the channel over on Patreon, where you can gain access to a community Discord server. The link is in the description. Please leave a comment below, and thank you for watching.